Hi, in this video, I just want to show you a more complicated account, which is the allowance for impairment loss trade receivable. If you haven't checked the T-account one, please do that first. So in this question, we've got this information. First, trade receivable, opening balance 1 million, closing balance 750K, allowance for impairment loss trade receivable, opening balance 60K, closing balance 50K. Be careful. We can see here, this is negative figure, okay? Because that's an allowance. And also on the question, we can find a figure, which is impairment loss, trade receivable, 70K. Okay, so let's draw the T account for allowance for impairment loss, trade receivable. But before that, let me bring you back to think a little bit about what can impact allowance for impairment loss, trade receivables. There are two things that might impact that. One is impairment loss. When we recognize impairment loss, we will debit impairment loss, trade receivable. We will credit allowance for impairment loss, trade receivable. And the other part is the trade receivables account. So the movement will also impact the trade receivable account. If we are debiting allowance for impairment loss, we will need to credit trade receivables, which means we are reducing the trade receivables and money not being able to collect it. Okay, so let's draw the T account. So we put allowance for impairment loss, trade receivable, we write debit, we write credit, okay? And because this is a negative figure, so even though it's on the asset account, it's more like a liability account. And we put opening balance on the credit side, put closing balance on the debit side. Just so opening 60K, closing 50K. Okay, the other part is this impairment loss of 70K. So when we, I also draw this impairment loss account for the showing purpose. What it's doing is doing debit, impairment loss 70K, and we credit allowance for impairment loss 70K. So we credit side, we put a 70K, okay? So in total on the credit side is 130K. And for the debit side, to derive at 130K, we need to have another 80K. So what that comes from? That comes from this journal. So there's actually a movement between the trade receivable and allowance for impairment loss. Even though it's not mentioned, we need to think about that because there's a missing 80K. So in this journal, we can see when we debit, okay, 80K in allowance for impairment loss, the credit side is trade receivables. Okay, so in the trade receivable account, on the credit side, we need to put 80K. In this example, actually, when we do this question, we can see allowance for impairment loss doesn't have a physical cash impact. Actually, what it is impacting is the trade receivable account. Okay, and when you get that number from allowance for impairment loss trade receivable, you will be get the cash impact on the trade receivable. So because in trade receivable account, there are a few things you need to think about. When we make a revenue on credit, we will debit trade receivable, we will credit revenue, okay? So, and when we receive cash, we will debit cash, credit trade receivable. So that's why this allowance for impairment loss is really important. You need to get the right number to put that into trade receivable to help you calculate the right cash inflow in the trade receivable account. I hope this video is helpful.